Welcome to the WealthWise Show. This program is for informational and educational purposes only and does not constitute investment, legal, or tax advice. Benowitz Wealth Management is a registered investment advisor in the state of Florida. Registration does not imply any level of skill or training. Listeners should consult a qualified professional before making financial decisions. Past performance is not indicative of future results. Now let's get started with the WealthWise Show.
Alrighty, welcome guys to another episode of the WealthWise Show. I'm your host, Derek Johnson, and today we're going to be discussing a continuation from what we talked about with the correction, market pullback, bear market, things like that. But today I wanted to go further into, why the mindset that we talked about earlier about, having a budget, things like that, staying into the markets, why it's so important. So to get into today's show, of course, we'll get through some housekeeping things. This podcast and this episode is not to be taken as personalized investment advice. It is for educational purposes only. I do not give advice on the internet. So if you're watching this, please do your own due diligence to fact check me and any person you hear on the internet. There's tons of resources to do that, but the main thing is understanding this is for educational purposes only. And so to get started, what I was talking about last week was how, when you in the markets, eventually you're going to experience a pullback, correction, or a bear market the longer you're in the markets. That's, something that's just going to happen, regardless of, how long you've been in there. Eventually, you're going to experience one of those things. And those things are healthy and normal. It keeps the market honest, essentially. And so when you experience a pullback or a correction or even a bear market, that means the valuations for where the world is not, it's not equally to each other. And so I'm recording this November 10th, 2025, and the reason why I thought the episode for the correction stuff was important because we recently went through a pullback, and it was a pretty quick pullback. What I mean quick, we depreciated pretty fast, and that usually scares a lot of people. But as you can see here, Monday, the market rebounded, and the market is, going back up. And so the key thing when you're thinking about being an investor is consistency. When you're thinking about building wealth, it's consistency. When you're thinking about budgeting, it's consistency. And so that is the key to making sure that not only are you building the wealth that you want for you and your family, but you're staying on track and not getting knocked off your path or your plan that you built out for you and your family. And so understanding that, yes, when I talked about a couple episodes about being afraid of money, being afraid to lose money is a good fear to have, but you cannot let that overpower logic. That's a good feeling to have because, there's been plenty of times where I felt like, something's not right here. And so what I would do is I would take that feeling and then go figure out why I'm feeling that way by doing some research. And then the logic and my feelings meet and it says, okay, now I need to do something. And so if you just run off a feeling like, oh man, the market's going down, let me just sell everything just to be on the safe side, you're missing out on potential gains. And so usually, I tell people if you have a significant amount of money, you need a professional to help you out. Like, if you have a chronic illness, you need a doctor to help you out. And so, if you have a significant amount of money, you're trying to invest in your own, it'll be wise to talk to a professional. But a lot of people who may be watching this podcast or listening, they might not have a significant amount of money. So a lot of this stuff they may have to do on their own. And so if you're going to have to do it, or if you have to do it on your own, the important thing is to be consistent and not panic. And so the market's rebounded today, and that's a good thing. Usually, in the wintertime, the markets do good. In the summertime, the markets do good. There's a typical pattern that happens with the markets. Usually, around February, March, or somewhere around there, February, March, April, the markets may stumble, may have a correction, and then summertime is good, and fall time it may do a pullback or correction if it's needed, and then so forth. And so, understanding that the market has patterns to make sure it keeps itself in check and keep itself honest, is a good way to be like, what, this may not be, the end all be all that I think that, the world's ending and now I need to sell everything. And if the world's ending, selling everything is not going to be helpful, just letting you know. And so, understanding that this is your money, you're in control of it, is important, because listening to myself or other people, to make these plans for you without you doing your own research or you doing your own due diligence, you're following someone else's plan, not yours. And so it'll be easier to follow your plan when you see these market downturns if you actually build your own plan. And so usually in these podcasts, I say stick to the indexes. That's usually, the go-to. The S&P 500 index, the NASDAQ index, the Dow index, ETFs. And I still recommend, sticking to those because, I shouldn't say I recommend. I think it's important for you to do your own research and look into why those are important to have part of your portfolio. But if you, listen to someone and say, hey, invest in video. I'm not saying invest in video. This is an example, educational purposes only. But let's say someone say invest in video. Well, why? A lot of people invest in video and do not know a single thing about the company. And to me, that shows lack of investor knowledge. Like, you're investing in something that you have no idea what you're investing in. You just invest in it because you see it going green. But the thing about companies like NVIDIA, like tech companies, very rarely they stay on top. Usually a competitor comes, like NVIDIA was a competitor to AMD. They were competitors. At one point, AMD was doing better than NVIDIA, and now NVIDIA is doing the best. AMD was a competitor to Intel. Intel was doing the best, AMD was not. And so it's like, you have these competitors that come and go, like BlackBerry, for example. BlackBerry was a competitor to the iPhone when it came out. And, that showed that how if you're in a company that's complacent, or if it becomes complacent because it's at the top, a smaller competitor or a new competitor can come in and eat your lunch. And a lot of investors, that's what we do. We research the competition, because maybe the competition is doing something that the company we're investing in is not doing. And then we see that this competition might eat the lunch of the person we're invested in. And so if you're only listening to people say, hey, invest in this without understanding why, then you're going to be missing out on, one, opportunities, but two, you have the chance of getting hurt, because what if you stay invested too long because you don't understand how the company runs? And so that's where it's like, well, it becomes tricky then. It's like, well, I want to invest, I want to make money, that's great. But if you want to invest, you want to put your hard-earned money into a company, you need to do your own research. You got to be consistent with doing your own research. And so pretty much this whole podcast episode is tailored around consistency, patience, and doing your own research, due diligence, knowledge. And so if you sold last week, and now we're up this week, that's just how, you gotta be patient, you gotta understand what you're doing. And what I might do is in the next few episodes is talk about how you don't have to necessarily sell things in your portfolio to protect your portfolio from drawdowns. There's tons of strategies, tons of ways that, I can educate you guys on how to make sure you're protecting yourself without getting out of the markets completely. So I think I might do that the next episode. You probably won't see me in the same clothes because, like I said, I record these at length, and I try to keep the episodes short now. If you notice, I used to do like 45 minutes, maybe an hour episode. Then I went down to 30 minutes. Now I'm down to like, 10 to 15 minutes. And really because topics that I'm talking about, don't necessarily need an hour. I can explain it pretty quickly. And you can always re-listen to it if you miss something or need to understand something. So I'm going to try to keep it short form so that way you guys can, get in and out, not take up too much of your time. But I greatly appreciate you guys listening. I'm very thankful to all our followers, all of our listeners, the comments, the people who are sending emails in, asking these questions. I'm going to get to it. I'm working on it. Trust me, I will answer your questions shortly. I appreciate you guys again. And until next time, stay WealthWise.